Have you read? So in the first example over here, you are buying a machinery of 4 lakh rupees and you are paying 4 lakh rupees by cash, correct? So this will be fully ignored for the purpose of actual cost. Yes or no? And you will not get depreciation on this 4 lakh rupees. Is it clear? In the second example, you are making the payment in parts, not completely in one time. Is it clear? So when you are making the payment in parts, so you have to see every part whether it is exceeding 10,000 in a day. Are you clear? First, you are paying 5,000 rupees, payment 10 times in a day. Will this be part of actual cost? Tell me now. This will not be part of actual cost. Okay. Your voice is not coming. Is it too low from my side? Please say something.
Okay.
Okay. Okay. Now it is coming. So this will not be forming part of the actual cost. Why? Because in the entire day, the cash payment is more than 10,000 rupees. Okay. But if you divide the cash payment in different days, okay, like in the second point, 10,000 rupees for 15 days, then it will be allowed as depreciation. Is it clear?
Sir.
And the last one is anyways account paycheck, that will definitely be allowed. Okay. I hope it is clear to all of you, right? Now pay attention, please. There is one section which is mentioned over here. We are not doing that section today, but I'm just giving you a brief idea about that. There is a section by the number called as you can see over here, 269 ST, right? Which says that no person shall receive from any other person. No person shall receive from any other person cash, etc. of 2 lakh rupees or more. Okay. I'm not allowed to receive cash. See, I am a buyer who is buying machinery, okay, in cash. So how I am penalized? By not giving the depreciation, correct? Even the seller will be penalized in the later topics, okay? Even seller cannot accept cash of 2 lakh or more. Are you clear? Even he is not allowed to do that. So that I'm not talking as of now, okay? That is some other discussion. We'll talk sometime later. Is it clear, all of you? So now let's go ahead with the discussion of further actual cost. Actual cost is a long discussion. It's not a small discussion, okay? So this is your color book. You will find all the details over here. Meaning of actual cost. Actual cost means actual cost as reduced by that portion which is met directly or indirectly by any person or authority. Okay. Then if you are buying any asset, etc., and you are making a payment to a person in a day, then you should make by account pay check, account pay draft, ECS, or such other prescribed electronic mode. Okay. And the next thing is till the time the asset is not put to use, you have to capitalize the interest. Okay. And once the asset is put to use, you can claim that as a revenue expense. Is it clear to all of you? Please tell me fast. Clear? Okay. Now there are some ICDS over here, which I would like to address you all. Some ICDS about which I have told you earlier. What is an ICDS? It's an income computation and disclosure standard given by whom? Given by CBDT to compute your income. Correct? In income tax, we will not follow the accounting standards. In income tax, we will follow the income computation and disclosure standards given by the CBDT for the purpose of computation of income tax. Now, first ICDS which we are seeing over here is a small one. Few extract of this ICDS is given by the institute, not the entire one. Institute has kept only few extract of this ICDS. So what does the first ICDS say? ICDS 5, tangible asset. It says the same thing that we all know. I'll just tell you the crux of this ICDS. Any expense which is related to the asset, you should capitalize. Any expense which is not related to the asset, do not capitalize. It says only this much. Let us read. Admin and general overhead expenses are to be excluded from cost. Do not take in cost. If do not relate to specific tangible asset. If they do not relate to the asset, do not take to the cost. Okay. Expenses which are specifically attributable to construction of a project or bringing it into its working condition. If you want to bring any asset into working condition, and for that purpose, if you want to incur any expense, if you have to incur any expense, then that expense will be added to the cost of the asset. Okay. So it is saying the same thing which we know, which I have already told you in my discussion. Okay. Expenditure incurred on startup, commissioning should be capitalized. Test run should be capitalized. Before starting the commercial production, before starting the actual production, I would like to do some test run, whether my production is done properly or not. So whatever expenditure I incur on test run has to be capitalized to the cost of asset, because that expenditure is also necessary to put the asset into working condition. Okay. And then last but not least, once the commercial production is commenced, after the plant has begun commercial production, then you should never go to the asset, then you should go to the P&L account. Then your right place is what? P&L account. You can claim that expense as a revenue expense. Okay. I hope it is clear to all of you. Similarly, one more ICDS is given over here, which talks about borrowing cost, which is similar to what is there in your accounting standard, also accounting standard 16. Say suppose I have taken some loan for fixed asset. Okay. Suppose this is my balance sheet. Okay. And in this balance sheet, this is last year, this is current year, this is last year, this is current year. Okay. Now there can be two types of loan in my balance sheet. Listen carefully, all of you. Two types of loan. Loan number one, 10% loan. First loan can be such kind of loan which is specifically for an asset. Specific. I know that I have taken this loan for the asset only. Okay. Which asset, sir? Qualifying asset. Sir, what do you mean by the term qualifying asset? You might have heard in accounts, financial reporting. A qualifying asset means an asset which takes substantial period of time for it to be ready for its use. Let me give you an example. If I take a loan for such asset which is under construction and it takes substantial period of time for it to be ready for its use, that asset will be called as a qualifying asset. Okay. Until the time the asset is a qualifying asset, till the time the asset is getting you ready, till the time the asset is what? Getting ready. Till that time the interest has to be capitalized. Once the asset is ready, now it can be used, then you cannot capitalize the interest. But in the language of taxation law and in the language of financial reporting, such assets are called as qualifying assets. And the definition of qualifying asset as per the financial reporting is any asset which takes substantial period of time for it to be ready for its intended use. That asset will be called as a qualifying asset. So for example, I have taken 10% loan. And that loan, when I went to the bank will ask me, why do you want loan? I said, I want a loan for this qualifying asset because I want to construct this asset. So if the loan is specifically for qualifying asset, then close your eyes and capitalize it. Yes or no? Don't have to think much. Yes or no? So that's what law also says. ICDS 9 says, borrowing cost. If the funds are borrowed specifically for qualifying asset, specifically for what? Qualifying asset, then the actual borrowing cost incurred during the period for which the funds are borrowed for that asset must be capitalized. Close your eyes and capitalize. Don't think much because you know it is only for this asset. Yes or no? It is only for what? It is only for a qualifying asset. You don't have to think much about it. But there can be second kind of loan. 9% loan, for example. And now this loan is a general loan. Okay. Suppose I have taken 10%, 9% loan of 10 lakh rupees. I have taken a 9% interest loan of rupees 10 lakhs, general loan. Now, some portion of that loan might have gone to qualifying asset. Some portion of that loan might not have gone to qualifying asset. Some portion of that loan might have been used for the purpose of buying stocks. Some portion of that loan might have been used to buy some other assets. Some portion of that loan might have gone to pay taxes. Some portion of that loan might have been there in the bank and the cash balance. I don't know. Now I cannot segregate. Now I cannot exactly identify how much loan is used for qualifying asset. It is not practically possible. So in that case, what shall I do? How much should I capitalize? I don't know. If a loan is specifically for qualifying asset, I will close my eyes and capitalize it. But if the loan is not specifically for qualifying asset, but it is a general loan, some portion may be used for qualifying asset, some portion for other purpose. So in that case, the government has given a formula, and according to that formula, you have to capitalize to the asset. Okay. Are you clear? So what is that formula? That formula is A into B divided by C. So what is A? A is your interest cost. Which interest cost? Specific or general? Please tell me. Which interest cost without reading? General loan interest, correct? Specific, so you don't have to put in the formula. Yeah, that too you can directly add to the cost of the asset. Yes or no? Specific loan, a loan which is specifically for qualifying asset, you can directly add to the cost of asset. You don't have to think much. Close your eyes and add. In general loan, first of all, find how much is the interest. Okay. That will be A. Okay. And some proportion of that will be capitalized. Okay. That will be B divided by C. Are you clear? So what is A? Borrowing cost. Except directly related for specific purpose. Okay. Are you clear till here? Okay. Next. What is B? In B, there are three cases. B1, B2, B3. Can you see that? You can fall in any of the three cases. And then there is C. So what is B? Listen carefully. Suppose you have taken a general loan of 10 lakh rupees. Okay. Now, obviously, some portion of that loan, see Nayar, please. Some portion of that loan is gone in qualifying asset and some portion in other purpose. Yes? Yes or no? So, how will I segregate that interest? So, the government says that take A as your interest and B, take average cost of qualifying asset. Okay. Whatever is the average cost of qualifying asset on the first and the last day of the previous year. Okay. And then divide that by C, that is nothing but average of the total assets. Very fair enough, right? See, on the asset side, there are two types of asset. One is qualifying asset, one is other assets, right? Take the average of qualifying asset divided by take the average of total asset. You will get the how much proportion can go to qualifying asset. Are you clear or not? Please tell me. Very logical. Alright, it's logical or not?
Logical, sir.
It's very logical, right? But what if the qualifying asset is not there on the first or the last day? Then what has to be done? Then B2 and B3 will be relevant for us. Listen carefully. In case the qualifying asset does not appear in the balance sheet on the first day, is it possible that the qualifying asset is not there in the balance sheet on 1st April? Why, sir? Because I started constructing the asset in the month of June, July, August, September, October. Yes or no? Then I cannot follow B1 because in B1 you have to take average of 1st April and 31st March. So what if the asset is not there on first of what? 1st of April. Because I started making the asset in the month of June. Yes. Or in case the qualifying asset does not appear in the balance sheet on both, the qualifying asset is not there in the balance sheet on first day also and last day also. Why, sir? How is it possible? It started in May. It started in May and it completed in December. That is also possible or not? So if the qualifying asset is there on the first day also, if it is there on the last day also, take the average. But if it is not there on the first day, because it started from June, or if it is not there on the first day as well as the last day, because it started in June, completed in December. So you will not find in the balance sheet on first day also. Yes or no, Palani? You will not find in the balance sheet on the last day also. Then what shall I do? What shall I take the B as? Then the B will be half of the cost of the asset. Is it clear? Whatever is the cost of the asset, take half. Okay, that will be considered to be the average. Is it clear? And last but not least, the qualifying asset does not appear in the balance sheet on the last day, but it appears on the first day. On the first day it is there, but last day it is not there. Then what shall I do? On 1st April it is there. On 31st March it is not there because in December, January or Feb or November it is completed. Then what shall I do? The value of 1st April and the value on the date of completion, take the average of that. Are you clear? Please tell me. Then you have to take the average of these 2 days. Okay. So this is how you are going to compute B, and the C is common for everybody. That is the average of total asset on 1st April and 31st March. It's very simple. If the qualifying asset is there on both the dates, take average. Okay. If it is there on first day and not on the last day, take average. If it started from between, that is June, July, August, September, then take half. Okay. I hope it is clear. And once the asset ceases to be qualifying asset, it means what? Now the asset is ready for its use. Yes. Then you cannot capitalize the interest to the cost of asset. Then you can take that interest to what? Please tell me. P&L account. As I have been saying you, it is allowed under section 36, subsection 1 and clause 3. Okay. So this is how you are going to go about with the borrowing cost ICDS. Okay. Not very important for exam. These have been notified since 2015. It has been 2024-25 now. So far ICI has never ever asked a question or any kind of question, neither practical nor theoretical question on what? On ICDS. They have not asked. They have not tested much. Okay. So ICDS as a concept might be important, but academically it is not very important for you all. Okay. And for you all, what is more important is what is relevant for your academics. So for academics, ICDS is not very important. So let's go ahead with the discussion of actual cost. Sir, actual cost still not completed? No. The term actual cost is very wide. You have to be very careful with this. What all things we have seen in actual cost is definition of actual cost. In that, there are a lot of small things we have seen. 10,000 rupees clause we have seen, right? If somebody has helped you to purchase an asset, you have to reduce that. That we have seen, correct? And then we have seen some ICDS extracts. Okay. Now, below the definition of actual cost, which is given under 43.1, below this, there are 13 explanations, not 1 or 2. Okay. Hey, you should not make such faces in life, huh? Vishnu Priya and Nivedha and Palani. The reason I'm saying is all of them were there in CA Inter also. Were you aware also? Huh? Were you aware that all these explanations that I'm going to teach you now, all of them were there in CA Inter? Most of the students don't realize only. Okay, it's okay. There's nothing new in that. But in CA final, you have to study. In CA Inter, don't pay attention on all those things. You just do the study from upar se. In CA final, you have to do in-depth studies, not just brush up. So 13 explanations are there below this. We are going to see them, all of them one by one now. But before that, one important thing that I would like to tell you all, and that important thing is, it is very unfortunate that under income tax law, in the year of sale of asset, you don't get any depreciation. Okay. The point I'm trying to say is as follows. Pay attention, please. Okay. Suppose if you purchase an asset on 15th of June 2024, say you purchased a furniture of 1 lakh rupees. Okay. Okay. Now, you are using the furniture. Now, suppose on 25th of March 2025, you sold the furniture. So, in accounts, you will get depreciation. Okay. Based on number of days. From 15th of June to 25th of March. But in tax, you will not get. In tax, in the year of sale, you don't get depreciation. Why, sir? Because The asset does not form part of the block on 31st of March. One of the primary conditions to claim depreciation under the income tax law is that the asset should be forming part of the block on 31st of March. If the asset is not there in the block on 31st of March, you won't get depreciation. Are you clear? Please tell me. Therefore, in this case, you are not going to get any depreciation. Okay, so keep this thing in mind. This is a general rule which you as a student should know it. Okay, that in the year of sale in income tax, depreciation is not allowed. Now coming to the discussion of 13 explanations. There are 13 explanations attached to the definition of what? Actual cost. Sir, why these explanations are there, sir? What is the reason? I'll tell you. These explanations are attached with 3 reasons mainly. There are 3 reasons to attach these explanations. One is to give you relief. The government wished to give you relief. Okay, that is the reason. Second, to stop mischief. To stop assessee's mischief, tax evasion. Okay, assessee is doing some kind of tax evasion with the definition of actual cost, and therefore to stop that particular thing, we are bringing this law. Third one is to give you some clarification. Okay. Now, what does this 13 explanation tells you? It tells you that your actual cost is now not actual cost, it is something else. Why? To achieve either of these 3 things. Generally, what is actual cost? Actual cost means actual cost as reduced by that portion which is directly or indirectly met by any person or authority. But the government says that we cannot apply this in all cases. If we apply this in all the cases, then there will be genuine hardship on the assessee. Therefore, we want to give relief. Okay. If we apply this on all these cases, then there will be tax evasion. Therefore, we want to change the definition of actual cost to some extent now. And we want to clarify a few things. So with an objective of these 3 things, the government has done what? The government has brought the definition of actual cost. Are you clear? Please tell me. So now we are starting with the explanations. The very first explanation is explanation 1. I am not doing that as of now. That is related to some other section. The second explanation is explanation 1A. That also I am not doing it now. That also related to some other concept. The first explanation that I am starting today is explanation 2. Explanation 2 to what? Explanation 2 to which section? To section 43.1. That is the definition of actual cost. Are you clear? Now, what does this section says? This explanation says. This explanation talks about, suppose you are Mr. A, okay, and there is Mr. B over here. And if you receive an asset from Mr. B, okay, and that asset is received by you in the form of a gift. If you receive an asset by way of a gift or by way of a will, okay, or by way of an inheritance. So if you receive the asset by way of gift, will or inheritance. So if somebody has given you, gifted you plant and machinery, furniture, computer, building, okay, then what will be your actual cost? If somebody has gifted you some other assets which are depreciable, then what will be your actual cost? If somebody has given you something through a will, or somebody has given you something in inheritance, your parents have given you something, okay, ancestral property you have got, then what is actual cost? Tell me, what is actual cost in reality? What is actual cost? What is your cost in that case?
0.
0, correct? Actually the cost is 0 only. Na? If somebody is receiving something as gift, then the cost is 0 only, right? But the government says that no, we will give you benefit, don't worry. Okay. Explanation 2 to section 43.1 is brought with an intention to give you benefit. All these explanations are brought with an intention of these 3 things. Okay. So the first explanation, explanation 2 is brought with an intention of giving benefit. So what is actual cost in this case, sir, for me? Is it 0? No, it is not 0. It is actual cost to the previous owner. Okay. Whatever price he has paid for the asset, whatever cost he has incurred for the asset, minus depreciation allowed to him. So whatever depreciation is allowed to him, after that, whatever amount will come, that will become your cost. Okay. In short, the WDV in the hands of the transferor will become your cost. Are you clear? Please tell me.
Sir.
Are you clear? So you can see this over here in your book, page number 1.8 in your color book. The first explanation I am not doing now. I have mentioned also to be done with section 35. Second explanation is with respect to capital asset. I will do all of them. You don't worry. You have to don't make a count also. That don't have to keep a count. That I remember. Don't worry. The third one, that is explanation 2 we have done today as of now. Read it please. Asset acquired by way of will, gift or inheritance. This is your mode of acquisition. This is how you have acquired the asset. Okay. What will be the actual cost? It will be actual cost to the previous owner. Who is the previous owner? Who is giving you the gift? Right. Less depreciation actually allowed to the previous owner. Is it clear to all of you? Please tell me. So now in the textbook, in the main book, I have put what illustration for these explanations. Okay. That how exactly it is going to work. So I want you all to read this illustration, please. And I want that you should not see this answer and get me the answer, please. Okay. Take your calculator, give some time and work on it and get me the answer. One person is gifting to another person. You have to tell me what will be the actual cost in the hands of the recipient. Okay. Calculator will be required. And don't forget that in the year of transfer, you don't get depreciation. Correct?
Sir.
Done? So what is your answer?
48,285.
48,285. Did you got this answer? Okay, let's see. Mr. X purchased the machinery in 2020. So it means it was purchased in 1920, right? Correct or not? So he purchased for 1 lakh rupees and he gifted in 24-25, correct? So depreciation has to be reduced till 23-24, correct or not? You should not reduce the depreciation of the year of transfer. Are you clear? So in the first year, you are going to get depreciation of half, 7.5%, because it was purchased and put to use for less than 180 days in the first year, correct? Then second year full, third year full, fourth year full, fifth year full. And in 24-25, Mr. X transferred the asset in the form of gift. So in 24-25, depreciation will not be reduced, correct or not? Is it clear to everyone? Shall I go ahead? Okay. So now let's go ahead with the next explanation. Explanation 3 after explanation 2. Shall I start? So pay attention, please. What is given in explanation 3, sir? Pay attention. There is Mr. A over here. There is Mr. B over here. Now Mr. A and Mr. B are friends. Okay. Now I have an old air condition. Very old. Okay. Whose WDV is very less. Say 50,000 rupees is the WDV of the air condition. Okay. Now I am selling this to my friend for 10 lakh rupees. Okay. It is just like selling old furniture or scrap from your house at a very high price. Now why I am doing so? I have some capital gain loss of 9.5 lakh rupees with me. Okay. 9.5 lakh capital gain loss is there. I'm incurred some loss in something, some shares or some property. Somewhere I made a loss. So I have the capital gain loss. So what I did intelligently, I sold the AC for 10 lakh and the WDV of the AC is only 50,000. Okay. So I'm getting capital gains of 9.5 lakhs. Okay. And the 9.5 lakh loss which is there with me, I'm fully setting off that. Okay. And my capital gains is 0. Are you clear? Are you clear till here? Now, why we are doing such transaction? To give advantage to my friend Mr. B. Now, Mr. B will say that the actual cost of this AC is what? 10 lakh rupees. Yes or no? And Mr. B will do what? Mr. B will claim depreciation on this AC on how much amount? On 10 lakh rupees. Yes or no? Now, there is one financial question which should come to our mind, that why Mr. B will buy an AC, old AC for 10 lakh rupees. Okay, just to save depreciation. To save depreciation, he will pay 10 lakh rupees. Please tell me, is this financially viable? Is this financially viable decision?
Sir.
No, it is not a viable decision. Okay. So, in reality, this transaction will be conducted how? Mr. A will sell the AC for 10 lakh rupees. Mr. B will enjoy depreciation on 10 lakh. And then Mr. A will, under the table, will give back the money to Mr. B. Are you able to understand or not? In cash. Otherwise, for Mr. B, it is of no use now. Are to claim depreciation, will I pay more? Then you should go to showroom and if the showroom person says that this car is for 2 lakh rupees, You say, no, I want depreciation, you take 10 lakh. Please. Will you do that? No, nah. The same way over here. A 50,000 item, why will I pay 10 lakh? So I will take in cash from Mr. A the money later on. Right now, I will pay Mr. A by check. Okay? Because if I want depreciation, I have to pay by check only now. I cannot pay by cash. Otherwise, other than 4 modes, yes or no? So right now, I will pay by check to show the transaction clean. Then I will take back in cash. Correct or not? And for Mr. A, there is no loss. Mr. A is indifferent. Anyways, he was having some loss which was about to expire in next few years. So he's setting off that loss against income, right? So now, what do you feel? The government will leave Mr. B like this only. So they have made an explanation where they have said that, listen the explanation, where an asset is acquired with an intention, where an asset is acquired at a higher price, where an asset is acquired at a higher price with an intention to reduce tax liability. So in this case, is Mr. B acquiring an asset at a higher price with an intention of reducing the tax liability? And the answer is yes. Then in that case, Mr. B will get the actual cost as determined by the assessing officer. In that case, the assessing officer has the power to determine actual cost. An assessing officer will determine the fair market value of the asset. But there is a condition on assessing officer also that he has to take a prior approval of joint commissioner. He cannot suo motu do that. So if the assessing officer finds such situation, he will take approval of whom? The joint commissioner, and then he will determine the actual cost. Are you clear? And suppose if the assessing officer with the prior approval of joint commissioner determine the actual cost to be 3 lakh rupees or 1 lakh rupees or for that matter 50,000, then your entire income will be recomputed based on what? The actual cost of this amount. Are you clear? Did you understand? Please tell me. So this explanation is just a second, Palani. This explanation is brought with an intention to reduce the mischief of the assessee to evade tax. Okay. Otherwise, anybody will buy anything from any person and then give back in cash. Yes or no? To claim higher depreciation. So therefore, such things should stop. And after this explanation, you cannot do that. So during the assessment, the AO will catch you. The AO will not come to know sitting at his home that who is purchasing at higher price. He will come to know only during assessment. Okay. When your assessment will be done, at that time, the AO will see which all assets you have bought. And if he finds that you are buying at a very high price, he may raise a question on your pricing. Okay. So this is what this explanation is all about. Okay. So if you read this from your book, see here, asset acquired with an intention to claim higher depreciation. What will be the actual cost? Amount determined by the AO with the approval of what? Joint commissioner. And normally AO take what? Please tell me. The fair market value of the asset as your actual cost. Is it clear to all of you? Please tell me, all of you. So this explanation is there over here, and below this there is an example. You can go through that example. I'm giving you 5 minutes to go through that example. In the meanwhile, Palani, you have asked me something. You were asking me.
What is the benefit for B, sir, by doing this?
For B, the benefit is there, na? He is increasing the cost. Cost is increasing, depreciation will increase, price will reduce, tax will reduce. Yes or no? That is that. For A, there is no benefit. Okay, but for B, though, there is benefit, na? A might take some commission for doing this activity from B. A might say B that how much tax you are saving? 1 lakh. Give me 30,000. You are saying now 1 lakh rupees because of me. Give me 30,000. Okay. So I have put over here story of 2 people. Mr. X is a seller. Mr. Y is a buyer. Okay. Done. Now, one thing to be kept in mind over here, in this entire transaction, the AO is doing what? The AO is changing the cost of the buyer, right? Yes or no? In this example, how much was the original cost at which it was bought? 1.3 crore, correct? Yes or no? And then the AO changed that to how much? 15 lakhs, correct? Now the law says that the seller cannot change its selling price. That is not allowed. Seller cannot say that my selling price is not 1.3 crore, my selling price is also 15 lakhs. Are you able to understand or not? A seller can also say, na, if you are changing the buying price of the buyer, you should change the selling price of the seller also. Correct? So the seller will continue to compute capital gain based on the actual selling price, 1.3 crore. Did you understand what I said? Please tell me. Okay. Shall we go ahead with the next explanation? Now let's, after explanation 3, let's move ahead with the next explanation, that is explanation 4. What is explanation 4? Pay attention please. Suppose this is previous year 2020-21. Okay, I am Mr. A. Whenever you guys will feel na, that it is exhausted for the day now, we are not under, let me know, please. Okay. By your commitment, I am feeling that you guys will not feel exhausted. Looking at your face as of now at least. Okay. You are looking still active only as you were at 8 a.m. in the morning. But whenever you will feel, I will not get exhausted. I am used to all these things. You might get exhausted because you have to consume the content. Okay. So you can feel free. It's just the initial days of the lectures. You will take some time to get used to it. Now, coming back to the discussion. Mr. A. Previous year 2021, Mr. A has bought a furniture for 1 lakh rupees. Okay. Now, after 2 years, in previous year 22-23, he sold to Mr. B. Okay. Then Mr. B in previous year 23-24 sold to Mr. C. Okay. And then in previous year 25-26, I reacquire the same asset. Same asset I reacquired for 2 lakh rupees. Okay. So one asset which belongs to me, I sold that to someone, then someone sold that to somebody else, and then again I bought back. Okay, the same asset I am buying back. So in that case, what will be my actual cost? Will I get 2 lakh rupees as my actual cost when I buy back the asset? The answer is no. In this way, the assessee is again trying to do some mischief of making a loop. He's trying to make a loop of few people. First person will sell to second, second will sell to third, third will sell to fourth, fourth will sell to fifth, fifth will sell to sixth, and from the sixth person, you will again buy back at a higher price. And on the same asset, you will claim more depreciation than you used to claim earlier also. Okay. Now, obviously, you will ask me one question, how will the government catch this? Okay. So it is the duty of the government to catch it. That I am not interested. This will only be possible if the government is able to identify such things. Okay. Otherwise, it is very difficult to trace such kind of transactions by the assessing officer. Assessing officer cannot go back 5-6 years back and check that whether this asset once upon a time belonged to the assessee or not. That is practically very difficult to identify. But if it is identified, then this explanation is attracted. And what does this explanation says? This explanation says that then your actual cost will be lower of 2 points. Point number 1, point number 2. Okay. Shall I say? That is WDV at the time of original transfer. When you originally transferred the asset, what was your WDV? It means which WDV they are talking about? Which WDV? They are talking about the WDV when you transfer to Mr. B. That is in 22-23. What was your WDV? Are you clear? Compare that with reacquisition price. Okay. Compare that with reacquisition price. Whichever is what? Lower will be considered to be what? Your actual cost. Are you clear? Please tell me. So WDV at the time of original transfer. Original transfer means when you have transferred for the first time. So whatever was the WDV at the time of first time, compare with the reacquisition price, whichever is lower will be considered to be what? Will be considered to be your actual cost. Is it clear to all of you? Please tell me, please, fast. So this is what explanation 4 is all about. So what is the explanation for? Reacquisition of assets sold. Okay. You are reacquiring. Synopsis of this section is this. So WDV at the time of original transfer, or the price paid for reacquiring the asset, whichever is less. Is it clear? Please tell me. So there is again one illustration over here on explanation 4. Get me the answer of this, please. If you're done, let me know. How much is the answer? 78,000 something it is coming, right?
Yes, sir.
Correct. Let's see. Mr. A acquired an asset on 1/1/2019. It means he acquired in what? 18-19 previous year, correct? And the asset was taken to the block on which 15% depreciation is allowed. Mr. A sold the asset to Mr. B on 1/1/2021. It means he is selling in 2021, correct? After how many
Yes.
years? After 2 years, correct? In the third year. 18, 19, 19, 20, 2021. In the third year he is selling, so we will reduce depreciation of only 2 years, correct? Year of transfer, no
Yes.
depreciation. So first year depreciation, half, because it is used for less than 180 days. And second year depreciation, full, okay? And for 2021, we are not going to reduce the depreciation because that is the year of transfer. So this is your WDV at the time of original transfer, and this is your reacquisition price, whichever is lower, which will become your actual cost. Is it clear, all of you? Please tell me. Clear?
Yes, sir.
Okay, fine.
Yes, sir.
Okay. So now let's move ahead towards the next explanation, which is explanation 4A after 4. Shall I say? Listen carefully. There is Mr. A over here. There is Mr. B over here. Now Mr. B has bought an asset of 1 lakh rupees. The WDV of that asset today is 60,000 rupees. Okay. Now Mr. B is obviously doing business. Mr. A is also doing business. Now, something strange happened. Mr. B sold the asset for 1,50,000 rupees to Mr. A. Okay. So if Mr. A has purchased the asset, he should use the asset for business, correct or not? Now what Mr. A is doing, after buying the asset, he leased back the asset to Mr. B. Okay. See what kind of activity is happening over here. First I am buying an old asset from you, and then I'm giving back you only on lease. Okay. So there is some kind of mischief which is going on over here to take tax advantage. What kind of tax advantage I will get? I will get depreciation on 1,50,000 rupees, correct? On that asset. Yes or no? And Mr. B will get the deduction of lease rentals. Whatever lease he will pay me, monthly lease for leasing the asset. Yes or no? So both of them will take tax advantage, undue advantages. Okay. So in that case, the government has said that the actual cost in such case will not be 1,50,000 rupees. The actual cost in that case in the hands of A will be WDV in the hands of the transferor. Who is transferor over here? The transferor is Mr. B. Mr. B is transferring the asset, correct or not? So whatever is the WDV in the hands of the transferor, that will become your actual cost. Is it clear, all of you? Please tell me. So this is what your explanation 4A is all about. You can check this explanation 4A over here. Just one line, nothing great as such. Okay. Asset purchase and leased back to same person. So WDV of the previous owner. Okay. That is the lessee. Mr. B is lessee na in my example. Mr. A is the lessor. Correct or not? Please tell me. That will become my actual cost. Is it clear to all of you? Please tell me. Okay, Palani. No issue. So what all explanations we have done so far? First one was where we are receiving asset. How we are receiving the asset? Please tell me. By gift, will or inheritance. Correct? Second, we are buying asset at higher price. Correct? Third, we are selling and then rebuying. Correct?
Yes,
And
sir.
fourth, we are buying and then we are leasing back. Are you clear with this? All these points so far?
Yes, sir.
So let me go with the next one. Okay. Pay attention, please. Suppose there is a CA student who tells his parents that I want a laptop. His parents said that why do you need a laptop to become a chartered accountant? He said that no, I want a laptop. I cannot watch lectures in mobile phone. I'm having a lot of trouble. My eyes are paining. I want a laptop. He wants laptop for doing fun and other activities. But he is fooling his parents to get a laptop by saying that you want to see lectures and all. Assume that his father has bought a laptop for him, okay, of rupees 50,000. Say in financial year 2020-21, okay. Now, obviously, this laptop is used for personal purpose. It has nothing to do with income tax, correct? It has nothing to do with depreciation. It is used for personal purpose. Are you clear or not? Financial year 22-21 gone, he is a student. Financial year 21-22 gone, he is still a student. Financial year 22-23 gone, he is a student. Financial year 23-24 gone, he is still a student. CA student remains student for a very longer period of time. Yes or no? Yes, Niveda? Not applicable for those who are watching our lectures. Okay. It is for those students who don't watch our lectures. This example. Okay. So he's struggling with his student life. So let's make him a chartered accountant. Say in 2024-25, that is in the current year, he became a chartered accountant. Now his parents ask him, very happy. After all the celebrations, his parents ask him, what is your plan now? What will you do? Will you go for a job? Will you practice? Will you go abroad? Will you do some business, startup? What will you do? You have achieved your goal of becoming a chartered accountant. He said that I will become a practicing chartered accountant. I want to open my own office. Okay, well and good. I want to become a practicing chartered accountant. Okay. So now he's going to start with his own office. In his office, there will be a lot of assets which were required. He would require table, chair, laptops, computers, printers, AC. So he thought of what? The laptop, he will use the same laptop which his father has given during his student life. Okay. So now the question arises is, he is converting his personal asset into a business asset. Yes or no? Till the time he was using for personal purpose, he will not get depreciation. But now he is using the asset for what? Business purpose, profession purpose. He can get the depreciation now. Yes or no? So now, if you are converting your personal asset for your business purpose, the question is, what will be the actual cost? Okay. What will be the actual cost of the asset? So the law says that, pay attention, that if you convert your personal asset into what? Into business asset. Okay. Then what will be my actual cost? I brought my personal AC to business. I brought my personal table to business. I brought my personal TV to business. I brought my personal car to business. I brought my personal computer, personal printer to business. What will be my actual cost? So the government says that for plant, machinery and furniture, for these three assets, actual cost will remain actual cost only. Okay. No need to do any exercise. You have bought the laptop for 50,000 rupees? Yes, sir. It will remain 50,000. Okay. Continue to claim depreciation on 50,000. No issues. Is it clear, all of you? Please tell me. Now you will say, sir, why so, sir? They should take some FMV, sir. Your mind will work like that as a student. They should take FMV, sir. Now, who will compute FMV of such small assets? Who has such so much time in life? I will compute FMV of the laptop. Then department will challenge that. Again, litigation will start. So the law says that don't do all those things. Directly say actual cost is actual cost. Take that actual cost and go ahead. Are you clear? Please tell me. Are you clear? But which asset is missing over here in my this particular arrow? Plant, machinery, furniture, converted from, brought from house to office, brought from your home to office. Actual cost is actual cost. Which is not mentioned over here? Which asset is not mentioned here? Vishnu Priya. Which asset is not mentioned? Are plant, machinery, furniture, which is the fourth asset? Why you have to think so much in life, beta? Are I am waiting for your answer. Niveda. Please tell fast. Don't. Please. There's some internet issue. She has some internet issue, I guess. She will come back. Okay. So it is applicable to plant, machinery, furniture. What about building? Building is not mentioned here. Correct? Tell me fast. Now for building, the government does not want to say actual cost will remain actual cost because building is a very expensive asset. Yes or no? Compared to plant, machinery and furniture. Plant, machinery and furniture are what? Are cheaper assets. Building is a very expensive asset. So for building, the government has made a specific explanation. Okay. Explanation 5. Are you clear? And suppose in 2015, I have purchased a building. I have purchased a house for how much? For 1 crore. Okay. And now today I converted that house to what? Tell me. An office for business purpose. Then now the government is not saying actual cost will remain actual cost. They are very, very intelligent. Now the government is saying actual cost will remain actual cost minus the notional depreciation for all these years. Okay. For all these years, you have to reduce a notional depreciation. Okay. And whatever amount will come after that, that will be taken as the actual cost. So I had a question to the government of India. What will be the tax rate? What will be the depreciation rate? Suppose if somebody has purchased a asset house in 2001, okay, and now I am converting that house into office. So from 2001 to 2022, I have to reduce notional depreciation. What will be the rate of that depreciation? Shall I take the rate of the respective years? Shall I go and check the income tax law of every year and check what was the rate in 2001, what was the rate in 2002, what was the rate in 2003, 4, 5, 6, 7, 8, 9, 10? I don't have any other work or what in life. So the law says that you have to reduce the notional depreciation taking the rate of the current year. Okay. That is the year in which you are converting. Which year you are converting? You are converting in 24-25, say for example. So if a personal plant, personal machinery or personal building is converted, personal plant, machinery or furniture is converted into business, then actual cost will remain actual cost. You don't have to do anything. Okay. But if a personal building is converted into a business building, then you have to compute your WDV today, reducing the notional depreciation. Is everyone clear with this? Please tell me. Okay.
Yes, sir.
So now there is one illustration based on this also. Please get me the answer. Page number 2.15. Are you done? What's the answer? 6,92,550. Perfect. So the building was purchased in 2020-21, correct? For 10 lakh rupees. So you have to take today's rate. Don't take the rate which was there in earlier year, correct? This is what the law says. Yes or no? Palani, what are you saying? Yeah.
The depreciation for year of conversion also should not be taken, sir.
No, it cannot be taken for that year. Okay. Only up to the preceding year, up to the last year. So the first year, actual cost 10 lakh. First year, 5% depreciation because it is put to use for less than 180 days. Second year, 21, 22, 22, 23, 23, 24. 3 years, full depreciation. Is it clear? Tell me, please. And then your actual cost becomes 690 to 550. And for plant, machinery, furniture, what will happen? The actual cost will remain actual cost. It will not change. Okay. So let's go ahead with the next few explanations now. Shall we? So in all, how many explanations we have seen? We have seen explanation 2, 3, 4, 4A and 5.
5.
Okay. See, for the purpose of examination, are we supposed to remember the case law name? This is what somebody has asked me yesterday, right? Vishnupriya, you have asked, right?
Yes, sir.
See, your priority should be to remember the case. What is the given in the facts of the case? That is more important. If you remember the name of the case, that is well and good. That is icing on the cake. Even if you don't remember, it's okay. Don't worry. It's not that you're not going to pass. You can pass, you can get exemption even without writing the case law name. It's okay. Okay. Same goes with the section numbers. If you remember the section number, well and good. If you don't remember the section number, don't try to quote wrong section numbers in the examination. That is a cardinal sin. That is a very big sin. So make sure that you put more focus on the concept. You put more focus on the questions that we do in the class. And your section number and your case law name is a secondary thing. Okay. If you remember, well and good. If you know that, if you feel that you are very comfortable with the subject in the study leave, then you can think about remembering the section numbers and remembering the case law name. Between section number and case law names, case law name will come at the end. Between the two, if you want to choose something, that I will do one of them, sir, then try to remember the section numbers. Okay. Forget about the case law name. In case of case laws, only try to remember the content and not the name. I hope it is clear. So now we will go ahead with some more explanations. Now all the explanations are very straightforward and one-liners, nothing great as such. Okay. So pay attention, please, all of you. We are almost done now with the explanations. Explanation 6. Capital asset transferred by holding company to 100% subsidiary company or 100% subsidiary company to holding company. Okay. So if there are two companies, one is 100% holding, another is subsidiary. So if they transfer assets to each other, okay, then what will be the actual cost in the hands of the recipient, in the hands of the company who receives? It is nothing but whatever is the cost or WDV in the hands of the transferor. Okay. It is as simple as that. Suppose if I am transferring you the asset and in my hand the WDV is 70,000, that will become your cost. Okay. I hope it is clear to all of you. So whatever is the WDV or cost in the hands of the transferor, that will become the WDV or cost in the hands of the recipient. As simple as that. In case of transfer of asset between 100% holding and subsidiary company. Okay. Similarly, in case of amalgamation and demerger also, the provision is same. Suppose there are two companies. One is me, one is you. I am one company, you are one company. I am amalgamating company. You are amalgamated company. Amalgamating company means selling company. Amalgamated company means buying company. Suppose I am selling my business to you. Okay. I am getting merged with you. So my all assets will also come to you. Correct or not? If my company is getting merged with you, my all assets will come to you now. So you will ask me, what is my actual cost of the assets which are coming from here to there? Okay, same. Whatever was the actual cost or WDV here, that same will become actual cost or WDV over there. Okay. So if in my books of accounts, the plant and machinery is showing, not books of accounts, in my taxation system, sorry, not books of accounts, in my tax system, in my block of asset, my plant and machinery is showing 1 lakh rupees. So that will become your actual cost. Is it clear? Please tell me. Now, as far as amalgamation is considered, demerger is considered, I have just given you a glimpse of them. Later on, there are specific chapters in your textbook for amalgamation and demerger. Taxation of amalgamation we have to do in detail from the very beginning. From the very beginning means first we need to understand the meaning of amalgamation as per income tax law. In income tax law in section 2, the term amalgamation, the term demerger, both of them are specifically defined. So it's a complete exercise of understanding the entire concept of amalgamation, because you should be knowing that in income tax, one of the important aspects are mergers and acquisitions. If you see big four chartered accountant firms, there are specific departments only taking care of what? Mergers and acquisitions tax implications. So that is a very important aspect in CA final, which was not there in CA Enter. So we will be doing amalgamation, demerger in great detail later on. As of now, I am only interested in one thing. If an asset is transferred from one entity to another entity, then what will be the actual cost? Nothing. Whatever was WDV there, that will become my cost. Is it clear? Please tell me. Is it clear?
Yes, sir.
Now, this is what explanation 6, 7 and 7a is all about. Now, explanation 8 we have already done. You can read once if you want. We have already done with the definition of actual cost. Once the asset is put to use, then interest cannot come in the asset, right? Then where will the interest go?
Revenue expense.
It is a revenue expense. 3613. We will see that section later on. 3613 in next part of the chapter. Okay. Now, explanation 9 is a new one for us, and it is important also for the exams. So pay attention, please. Explanation 9 is with respect to GST credit. So suppose I am Mr. A, and suppose I bought what? I bought a laptop, for example, of 1 lakh rupees. Okay. And there is a seller over here who is selling me the laptop. I bought the laptop from the seller for 1 lakh rupees. Now, obviously, when I'm buying the laptop, the seller will also charge 18% GST from me. Yes or no? Seller will charge the GST while selling the laptop to me. And laptops are subject to 18% GST. So the seller will take 18,000 from me and I will pay him 1,18,000 rupees. Okay. Now, what will I do later on? Of this 18,000 rupees, I am doing business. What will I do? I will take the input tax credit of this GST amount. Yes or no?
Yes, sir.
So here comes the income tax law, which says that if for this GST portion you have taken input tax credit, okay. So if you have taken input tax credit for the GST portion, then you cannot claim depreciation on 1,18,000. Fair enough? Yes or no?
Yes, sir.
Because on 18,000 you are already taking tax benefit under GST law. So in that case, your actual cost will be 1 lakh rupees. Is it clear? Please tell me. So in that case, you will claim depreciation excluding the GST portion. Is it clear, all of you? But what if I don't get the GST credit? For example, if I buy a car, on car GST credit is blocked by the department. It's a block credit, if you are aware of that. If you buy a car, you pay 28% GST, you know. that entire credit is blocked. That is not allowed to normal assessees. So what about that case? In that case, you can claim depreciation on the GST portion also, because that GST is now part of your cost. Are you clear?
Yes, sir.
Please tell me.
Yes, sir.
In that case, you can claim depreciation on the GST portion also. So the government is giving you choice in respect of laptop. For laptop, there is a choice, huh? Because for laptop, the government is saying if you want to take GST credit, take GST credit. If you don't want to take GST credit, take income tax depreciation on entire 1,18,000. But for car, there is no choice because that is blocked under GST. For car, you have to claim depreciation only because GST credit is not available only on car. Are you clear? Please tell me.
Yes, sir.
So this is what your explanation 9 is all about. You can check it over here, please. Point number 9. Actually, this is not only applicable for GST, it is applicable for all indirect taxes. Okay. Have you done indirect tax in CA final? Not done.
No.
Okay. If you would have done, you would have come to know even on custom duty, you get the credit. Palani, do you get input credit on custom duty or not?
Yes, there is you will put IGST also that will take credit.
Yes. So this explanation is for all indirect taxes in short, mainly for GST. Okay. Okay. So the rule is very simple. If you take the credit, your cost will be excluding GST. As simple as that. You cannot take both the advantage, that GST credit also taking and input tax credit also taking and income tax depreciation also taking. Not allowed. Okay. Explanation 10, absolutely important. I will just come to this explanation in the next 5 minutes. But before that, one less important explanation is there. I will deal with that first and then I will come to explanation 10. Okay. What is that less important explanation? Is explanation 11. I'll just try to explain you what is explanation 11 first of all. Pay attention on the board, please, all of you. Shall I? Explanation 11. Section 43(1). Suppose there is a person, Mr. A, who stays in United States and he is non-resident obviously and he does business over there. And for the purpose of business, he might have purchased some computers few years back for 1 lakh rupees as per Indian rupees, say in 2020-21. Okay. Is he liable to pay income tax in India?
Depends upon the scope.
No. The data is very clear in front of you. Depends upon the scope. I have written the entire scope on the board, whether he is liable to pay tax in India or not. He is a non-resident, he is doing business in United States only.
No, sir.
Is he liable to pay tax in India? No. If a non-resident who is outside India, doing business outside India, then he has nothing to do with India. Correct or not? Please tell me. Yes?
Yes, sir.
He has nothing to do with India. But now in 2024-25, he is planning to come to India. He himself is not planning to come to India, but he is planning to open one, what? Branch in India. Okay. Now, will he be liable to tax in India for Indian operations? Yes.
Yes, sir.
For Indian operations, he will be liable to tax in India, definitely. Okay. Now listen carefully. Pay attention. So now for the purpose of Indian operations, he is transferring this computer to India. He is transferring this computer to India. The computer which was purchased in United States for United States business. Okay. Now he is transferring that computer to India for Indian branch. Will this computer be eligible for depreciation? The answer is yes. So the question is, what will be the actual cost of this computer? If a non-resident is bringing asset in India for the purpose of business and profession, then what will be the actual cost is given in explanation 11. Read it, please. Like that, if Google is sending some assets from United States to India, if Apple is sending some assets, it's applicable not only to Mr. A, to any non-resident. Yes? So what is the actual cost?
It was purchased and used in India.
So how will you determine it? In my example, how will you determine it? How will you determine in this case?
The cost is 1 lakh.
Actual cost is 1 lakh. And then
Into 15 into 15%.
40% computer, madam. Don't forget.
Or 40%
Yes.
right.
So you have to compute depreciation from 2020-21 to 2023-24. Yes?
Yes, sir. Yes, sir.
Yes or no?
Yes,
Because
sir.
the law says that compute actual cost as if the assets was used in India. Okay? So you have to remove the depreciation of all the years. Is it clear, all of you? I hope it is clear. Right? So now there is one illustration based on this over here. I want you all to solve this illustration, please. Get me the answer. Done. Let's say how much?
1,03,680.
1,03,680. Yes, correct. Absolutely correct. Don't get confused between assessment year and previous year, please. These are assessment years, therefore it is looking 1 year ahead. Are you clear or not? You will get depreciation only till previous year 22-23. Yes? Which eventually makes assessment year 24-25. Yes or no? Please tell me. Please tell me.
Yes, sir.
Okay. So now let's move on to the last explanation in section 43.1. But don't be under an impression that this is the last explanation. We have already left 2 explanations at the beginning. Yes. And there are 2 more explanation after explanation 11 and 12. After 11. Okay. Which will come later. 12 and 13. Those are also related to some other topics. Okay. But we are not doing that today. Whatever was independent, we are doing today. Whatever is dependent to some other chapters or some other section, that we will definitely do. You don't worry about it. Okay. You don't have to think about it. One last thing I am doing it as of now. Explanation 10. Very important. This explanation is something similar to what we have seen in the definition of actual cost. What was actual cost? Actual cost means actual cost as reduced by that portion which is met directly or indirectly by any person or authority. Correct or not? So, somewhat similar to that, this explanation tells us that if any grant or subsidy or reimbursement is received for any asset, okay? If you receive any grant, reimbursement or subsidy, and if it is related to an asset, plant, machinery, furniture, building, then you should reduce from the cost of asset. As simple as that. Right or not? Right or not? Okay. So if any subsidy, grant, reimbursement is received, you have to reduce it from the cost of the asset. Okay. Because that portion you have not incurred from your pocket. You have not borne the burden of that amount. So if you have not borne the burden of that amount, you have to reduce it from the actual cost. Now, what is the difference between subsidy, grant and reimbursement? Are all 3 of them same? Somewhat similar to each other. But still there is a very minute difference between the 3. Even though the treatment of all 3 of them is same under the income tax law. But there is a very minute difference between the 3. Sir, what is the minute difference? Suppose I want to buy a plant and machinery of 100 lakh rupees. So I went to government and I said that please help me. So the government said that we will make you buy at 80 lakh rupees. We will subsidize you. So the government said that go to that vendor, we will buy it for you. You can buy it for 80 lakh rupees. So that is a subsidy. Now what is a grant? I went to the government, I said that I want to buy a plant and machinery of 100 lakhs, please help me. So the government said that yes, take this 20 lakh rupees and you can buy the asset of your choice. So the grant is upfront money given to me. Okay. And what is reimbursement? That you all understand. That I went to the government and said that I want to buy a plant and machinery of 100 lakhs. So government said, you buy it and then we will give you later on. Okay. We will reimburse you. We will reimburse you after some months or some years or few weeks. So all 3 of them are nothing but an assistance from the government. That's it. It's a help from the government of India. Therefore, whether it is a subsidy relating to an asset, whether it is a grant relating to an asset, whether it is a reimbursement relating to asset, if it is related to plant, machinery, furniture, building, reduce from the actual cost. Okay. Now, my question to all of you is to keep one thing in mind, that it is very precisely mentioned these 3 things only. Okay. Nothing else. Apart from subsidy, grant and reimbursement, nothing else is mentioned in explanation 10. Be very careful about it. Okay. Okay. Now listen carefully. Now a question will arise. If subsidy, grant and reimbursement has to be reduced from the actual cost of the asset. Okay. So the question will arise now. What will be the treatment of other items? Like if I receive subsidy from the government for raw material, for buying raw material. If I receive subsidy from government for electricity expenses, right? I may receive for that also. Say government has given me some subsidy for what? For the purpose of buying raw materials. Some subsidy is given by government so that I can pay what? My electricity charges. What will happen for that? Yes or no? What will happen for those subsidies? Or for that matter, suppose I am a company A Limited and there is government over here. I took a loan from government. Government has given me a loan. Some kind of help the government has done for me of say 5,000 rupees. This is my balance sheet. This is my loan, 5,000 rupees. Okay. And now with the help of this loan, I have bought an asset. 8,000 rupees. 3,000 rupees, I have put it from my pocket. Okay. To buy that asset. Now the question is, suppose after few months or few years, I am going into losses. I am not able to repay the debt to the government. So I went to the government and I pleaded in front of the government. And I said, government, please waive my loan. Please waive my loan. I don't have money. Please waive it off. And eventually the government waived off my loan. Okay. Say for example, the government waived off the loan. This loan is gone. So what will be the treatment of that? Will that waiver of loan be also be reduced from the cost of the asset? Is that covered in explanation 10? Tell me.
No, sir.
It is not covered in explanation 10. Explanation 10 is very specific about subsidy, grant and reimbursement related to asset. Yes or no? So what if I receive a revenue subsidy like electricity subsidy, raw material subsidy? What if my loan is waived off by the government? Yes. Then what is the treatment of that? So all, what please say?
Reduce from the actual cost.
It will be reduced from the actual cost. How?
Reduce.
It cannot be reduced from the actual cost, right? Yes, because explanation 10 very clearly says, right, that only subsidy, grant and reimbursement can be reduced. So such things, to cover such things in Finance Act 2015, the Government of India made an amendment in the definition of income. Income is defined under section 224. Okay. Under income tax law, income is defined under 224 and they inserted one clause in section 224(18). This clause was inserted in 2015, this 18th clause. And what does this clause says? Check with me. Come here. Section 224(18). Any subsidy which subsidy other than explanation 10, other than explanation 10 subsidy, okay, not the subsidy which is covered in explanation 10, because the subsidy which is covered in explanation 10, that treatment we know or not? Yes.
Yes, sir.
So this subsidy is not talking about fixed asset subsidy. Yes. This is talking about that electricity subsidy. This is talking about that raw material subsidy. Are you clear or not? Please tell me. Any subsidy, grant, cash incentive, duty drawback, waiver, etc. by central government, by state government, any authority, any body, other than explanation 10 shall be treated as income. Shall be treated as what? Income. Directly it will be your income. Directly it will be your income. So any subsidy you receive for electricity, for raw material, or the waiver of loan, which I have just shown you, that 5,000 rupees will directly be now what? Tell me now, will directly be your income now. So you just have to think two things. If subsidy, grant and reimbursement are related to fixed asset, then what is the treatment? Reduced from the actual cost. correct?
Yes, sir.
And any other kind of assistance from the government or central government, state government, any body authority, then what will you do? Treat it as income. Okay. Now, as I told you, this definition was amended in 2015. This clause 18 was inserted in 2015. The moment this clause was inserted, there was a chaos amongst the citizens of this country. The citizens of this country were worried. They were asking one very important question to the government of India at that time, that you said that subsidy received from government is income. Then please tell us whether the LPG subsidy which you give to the citizen of this country, will that also be called as income? Technically speaking, yes. Yes or no? Because it is written any subsidy from government other than explanation 10. Are you clear or not? Other than explanation 10, any subsidy from government is income. So what about LPG subsidy? Is that also income? So the government made a clarification in point number 3. Check. Not applicable on LPG subsidy or any other welfare subsidy of the individual. Okay. It is not for your personal benefit. If there is some personal subsidy which you are receiving from government, it is not subject to tax over here. Okay. For example, you are receiving some subsidy from the government for higher education. Government gives or not subsidy for higher education to kids? Please tell me. So that will not be considered as income. Are you clear? Please tell me.
Yes, sir.
One more issue arised. Let me give you an example. One more issue arised. Pay absolute attention. Listen carefully. Every year, finance minister come to the budget in the parliament and gives his budget, gives his or her budget. And in the budget, finance minister makes big commitments. I propose to allocate this many thousand of rupees for this purpose, this many thousand crore of rupees for this purpose, this many thousand crore rupees for this purpose. Okay. So from where the money is going? The money is going from the finance ministry. Okay. The question is where it is going. Where it is going. Suppose the government says that I propose to allocate 2 lakh crore rupees for insurance of the people of this country. So who is taking care of that responsibility? Whether the insurance is reaching to people or not. Okay. I propose to allocate 50,000 crore rupees for, say for example, for Swachh Bharat Abhiyan. So who is taking care of Swachh Bharat Abhiyan? So for this purpose, the government makes what? A separate trust, separate associations. The responsibility has to be segregated. They cannot give entire money to one party or one person. So for whatever purpose they are allocating money, for that purpose, please mute yourself, Vishnupriya. For that purpose, for whatever purpose you are allocating money, for that purpose, the government will make an association. Separate entity will be formed. And that entity will take care of that money, and whether it is utilized properly or not, audit, etc. will be done for that entity. So how the money flows? Central government has the money. Central government gives the money to finance ministry, and finance ministry allocate to different trust, who will be given responsibility for carrying out the work mentioned in the budget. So now the question is, if the central government is giving money to a central government trust to complete the commitments, or if the central government is giving money to the state government trust to complete the commitments, whether that should also be taxable as income in the hands of the trust? Please tell me. That does not make sense. That is people's money going back to people. That is not an income, na? Yes. So for that purpose, the government has excluded that also in point number 2 over here. You can check it over here. Any subsidy received by a trust or institution established by central government or state government as a corpus fund from central government shall not be treated as income. Are you clear? Please tell me. So if central government is giving any money to any central government trust or institution, or to state government trust or institution, then that will not be subject to what? Tax in the hands of the recipient. Are you clear? Please tell me. So this is what these explanations are all about. We are yet to do few explanations, like explanation what 1a, we have not done it. Explanation 12, 13, we have not done it. Okay. Explanation 12, 13 is going to come in the later topics. So this is where we stand as far as our actual cost is considered and depreciation discussion is considered. Okay. So you can go through it once, then we'll go ahead. So let's go ahead with the next part now after all the explanations. And the last thing which we did in the explanation was with respect to subsidy, grant, reimbursement. Okay. Now there is one ICDS based on this, on government grant. Let's try to see that ICDS. Okay. Shall we? So there is an ICDS over here, not very important for exam. Actually, not at all important for exam. They have never ever asked this particular thing in the examination. But whether it is there or not there, it is my duty to teach you everything which is there in the syllabus. So ICDS 7 is there in front of us, which talks about government grants. Okay. Just a second. So when the government grant should be recognized, what should be the timing of taxability? At what point of time you should pay tax on the government grant? And secondly, how much tax you should pay on the government grant? Okay. How it will be recognized? So there are two questions mainly we need to answer over here. One is when you will recognize the government grant, and secondly, how you will recognize the government grant under the income tax law. So these two important questions are addressed by ICDS 7. Pay attention, please. Point number 1 over here says that government grant should not be recognized until two conditions are fulfilled. If two conditions are fulfilled, you recognize the government grant and pay the tax. Okay. First, until you have a reasonable assurance that you will comply with the conditions attached. See, when government will give you grant, government will attach some conditions to the grant. Say government is giving you 100 crore rupees. They are not giving you 100 crore rupees unconditional. They will attach some conditions. Okay. So as and when you feel that you will comply with the conditions, you can recognize. Okay. If you feel that it is not my cup of tea to recognize it, then don't recognize until and unless it is received by you. Okay. And the second condition, until there is a reasonable assurance that the grant shall be received. Now the government has made you promise that we will give you 50 crore rupees, but you are not sure on the words of the government. You feel that the government is saying for the sake of saying. You are not sure about whether they will give you or they will not give you. So if you are not sure, don't recognize. So you should be sure of two things. One, you should be sure of yourself. Second, you should be sure of the government. What is in your hand, you be sure of that. What is in government hand, for that, if you're not sure, then don't recognize until you receive the government grant. Okay. Last but not least, once you receive the grant in your bank account, then you cannot postpone your recognition of income. Okay. So if you have received the money, then there is no question of what extending the recognition of income under the income tax law. Pay tax and go ahead. Okay. Now what is the treatment? How will you treat? Now I don't have to teach you treatment. Treatment is something which you have already done. Okay. But still ICDS also speaks about the treatment, how government grant will be treated. For example, where the government grant relates to depreciable asset. I don't have to say, what will you do? Okay. Reduce from the cost of asset, as simple as that. Yes or no? Please speak something. Am I able to listen?
Yes, sir.
Okay. So where the government grant is related to fixed asset, depreciable asset, reduce it from the actual cost. Okay. Sometime government will give you grant for fixed assets, not one fixed asset, but lot of fixed assets. For example, suppose you tell government that I have a project of 100 crore rupees, please finance me something. In that project, I am going to purchase plant and machinery of 60 crore. building of 20 crore and furniture of 20 crore. This is how I'm going to have a project of 100 crore. Please finance me something. Okay. So the government says you that we will finance you 20%, for example. So 20% of 100 crore comes to how much? 20 crore. Now what assessee does? He tries to play smart and he tries to reduce 20 crore from where? Directly from say building or furniture. He does not want to reduce 20 crore from plant and machinery. The reason is very simple, because plant and machinery is depreciable at 15%. And he does not want to reduce the higher rate depreciation wala asset. Are you able to understand or not? So he's trying to play smart. He is reducing from furniture because furniture is anyways less depreciation. He's trying to reduce from building, not from plant and machinery. So the government has said that in the ICDS that where the government grant cannot be directly attributable to an asset. Okay. If the grant is not directly attributable to an asset, then deduct proportionately from the actual cost. You have to proportionately reduce from all the assets proportionately. That is from plant and machinery 20%. That is 12 crore, from there it will be reduced. Are you clear? And 20% of building, that is 4 crore, there it will be reduced. And 4 crore from furniture. Is it clear? So if it is related to single asset, it is attributable directly to the asset, then reduce from that asset. If it is not directly attributable to one asset, then you have to reduce proportionately from all the assets. Okay. Now the government grant which is given by government to you is subject to some conditions. What if you don't fulfill the conditions in future? Then you have to refund the government grant, right? Tell me please. Now if you have to refund the government grant, you have to reverse the treatment. How will you reverse the treatment? Please tell me. You have to reverse the treatment now. How will you reverse the treatment? You will add back to the block of asset. Correct? So in case of refund of depreciable asset, you will add back to the block of asset. You will increase the actual cost or WDV of the block. Is it clear, all of you? So you are going to add back to the block of asset. I hope it is clear. Clear? Okay. Now what about other kind of grants? This was only with respect to depreciable asset. What about other kind of grants? Where the government grant relates to non-depreciable assets. Suppose the government gives you grant for what? Say for raw material, buying raw material. Your commitment is to buy raw material, or your commitment is to pay electricity bill. Okay. So if the government grant is not for fixed assets, it's not for depreciable asset, it's for other purpose. Okay. So in that case, the government says that as and when you will honor your commitment, okay, as and when you will complete your obligation, okay, you will recognize the income. Okay. So you will recognize as income over the same period during which the cost of obligation is charged to income. Okay. So as and when you will purchase the raw material, you will debit the raw material to P&L. You will also recognize the government grant. As and when you will pay the electricity bill, you will debit the electricity bill to P&L. You will also recognize the what? Government grant. Okay. Now third category, where the government grant is received in the form of a compensation from the government. Okay. Can government compensate you for some loss, some of your losses? For example, there has been a flood in my state. For example, there has been earthquake. There has been massive loss which has happened to my business. Yes or no? So the government has given me compensation. The government has announced that you will get a compensation of this much amount. So that is also taxable. Yes, that is also taxable. How will that be recognized? So that shall be recognized as income of the period in which it is receivable. Whenever the government will announce that, in that year you are supposed to pay tax. Now this is slightly wrong. Okay, it should not have been like this. The government should have taxed this on receipt basis rather than receivable basis. Yes or no? First of all, I am into trouble. There has been some problem in my business because of man-made or natural calamity. I don't know. My business is destroyed and I am asking for a compensation, and they are taking tax on compensation on accrual basis. From where the hell I will pay the tax if I don't receive the compensation on time? Yes or no? So therefore, this should have been what? received rather than receivable. And then the government said that if any other government grant is there, it should be recognized as per the accounting concept, matching concept. Okay. So the way you recognize in your accounting system, the same way you will recognize under the income tax law also. So this is a small ICDS, not very important for examination. For you all, what is important is the explanations. Explanation of section 43(1) are absolutely important and not this particular thing. Okay. Now let's move ahead with the next part. Pay attention, please, all of you. There are small parts now. We are almost on the verge of completion of depreciation now. Okay. So can you imagine that how much time has gone only for understanding what? One deduction, and that is what? And that is depreciation. Okay. So shall I go ahead? So now we will talk about what? We will talk about unabsorbed depreciation. The time is to talk about unabsorbed depreciation. Okay. So what is unabsorbed depreciation? The provision of unabsorbed depreciation is given in section 32 subsection 2. Please remember this section. I am telling you. Okay. Generally, I don't tell students to remember the sections, but this one I am telling you, please remember. Okay. It's an important section. It's a very, very, very important section. First of all, what is unabsorbed depreciation? This is your P&L account. Okay. This is your revenue. Say 100 lakhs. This is your expenses. Say 120 lakhs. Okay. And this is your depreciation on asset. Say 30 lakhs. So clearly you can see that there is a loss of what? 50 lakhs over here. Correct? Now in accounts, loss is a loss. In accounts, there is no segregation of loss. Okay. Whether the loss comes because of expense or whether the loss comes because of depreciation, accounts has nothing to do with that. But in tax, the loss is segregated into loss because of expense and loss because of depreciation. Tax segregates that. Okay. So now the tax is segregating that into two parts. 20 lakh loss is because of expenses. And this loss will be called as a business loss. And 30 lakh loss is because of depreciation. And this loss will be called as what? Unabsorbed depreciation. Okay. Are you clear or not? Please tell me. So now the question is, why so? Okay. Because the government want to segregate both of them. They want to keep the capital loss separate and the revenue loss separate. That is the reason they have segregated that. Okay. This is a simple reason that I can give. Now, what is the difference in treatment? There is a great difference. Huh? This is very special. Unabsorbed depreciation is very special under income tax law. It has been given great amount of special benefits. Business loss, first of all, can be carried forward and set off only against business income. It cannot be set off against other incomes. Unabsorbed depreciation can be carried forward and set off against business income also, and it can be set off against other income also except salary. Unabsorbed depreciation except salary can be set off against any income. Okay. Any income. But business loss cannot be set off against any income. It can be carried forward and set off only against business income, not against other income. Are you clear? Second, business loss are allowed to be carried forward for 8 years. Unabsorbed depreciation is allowed to be carried forward for infinite number of years. There is no time limit. That is one of the biggest advantage of what? Unabsorbed depreciation. Are you clear? Now, suppose I want to ask you one question now. Shall I? Shall I ask you? Suppose my profit is 10 lakh rupees and I have unabsorbed depreciation of 6 lakhs. I have business loss of 6 lakhs and I have currently a depreciation of 6 lakhs. So in that case, what will be my priority of set off? Please tell me. What shall be my priority of set off? What shall I set off first and then second and then third with logic? Tell me please. First, I will always set off current year depreciation because it is mandatory to claim depreciation. Yes or no? Second, I will always set off business loss. Why? Because it will expire in 8 years. Yes or no? And third, I will set off what? The unabsorbed depreciation because it will be carried forward till infinity. Therefore, this should be your priority of set off. You can see over here. Pay attention, please. Check. You can read this if you want. Okay. Is it clear? Tell me. Okay. Now pay attention. How to claim depreciation in case of amalgamation, demerger and succession. Suppose amalgamation happened in the year, between the year. Then how will you claim depreciation? Okay. Say for example, there is a company by the name called as A Limited. Today is 1st April 2024. I have some furniture opening WDV. 1 lakh rupees. Okay. Now suppose after a few months in the month of say October, 3rd October 2024, B Limited acquired A Limited. Okay. Now in that case, how will depreciation be computed? Will depreciation be allowed only to A Limited, or it will be allowed to only to B Limited, or it will be given to both of them? See, practically speaking, what we have done so far is depreciation should only be allowed to A Limited, correct or not? Yes, because in the, depreciation should only be allowed to B Limited. Because in year of transfer, the transferor does not get any depreciation. Yes or no? This is the basic thing which we have learned today. Are please tell me. By default, who gets the depreciation in the year of sale? The buyer will get, right? The buyer will get. Yes. The seller will not get in the year of transfer. Seller does not get the depreciation. But here, the government has created an exception in case of amalgamation, demerger and succession. What is amalgamation? Merger of two companies. What is demerger? Separation of one company into two parts. What is succession? When an individual is converted into a company, or when a firm is succeeded into a company, it is called as succession. In all the cases, there is a change of entity. So what has to be done? So for that purpose, the government has created a proviso. What the government has created? Proviso. Proviso means what? An exception is created by the law. And the exception says that in case of amalgamation, in case of demerger, in case of succession, compute depreciation as if no amalgamation, no demerger, no succession has taken place. So you have to compute as if nothing has taken place. So you have to compute depreciation. Listen carefully. In case of amalgamation, demerger and succession, you have to compute depreciation as if you just assume that amalgamation did not happen only. Okay. And compute. Please tell me what will be the depreciation. Fast. 10,000 rupees. Correct? 1 lakh 10%. Yes or no? 10,000 rupees. So in case of amalgamation, demerger and succession, compute depreciation as if there is no amalgamation. As if amalgamation did not happen only. And compute it. Sir, compute it, sir. Now what to do? Now divide this between both of them. That's it. Now bring back this company now. While computing, hide the company. Okay. While computing, the B Limited should be hidden. And once depreciation is computed, that computation is done. Now you will divide this depreciation between A Limited and between B Limited in the ratio of what? the number of days the assets are used by both of them. Are you able to understand what I'm trying to say? So this depreciation of 10,000 will be segregated between what? A limited and B limited in what ratio? From 1st April to 2nd October, count the number of days. Okay. And from 3rd October to 31st March, count the number of days. Okay. So I think so it is 184. No, not 184, 185, I guess. And this is 180 because we have already done this calculation that from 3rd October, if you count, it comes to 180. Yes or no? We have done this calculation earlier while finding out more than 180 days, less than 180 days, right? So this entity will get 10,000 into 185 divided by 365, and this entity will get the balancing amount. Is it clear, all of you? Please tell me. So this is how you are going to compute depreciation in case of amalgamation, demerger and succession. Read it, please. This is the paragraph. Read. Is it clear? Now, we will talk about one very important thing. Pay attention, please, all of you. Now we will talk about something which we started at the beginning. Okay. Now last two things I will complete and then we will end the lecture. Okay. We will not start with another new deduction today. Okay. Because that will be too much for you all. If you tell me, I will continue. No issues. I have no issues. Okay. So now we will start about SLM depreciation. Okay. Shall I? So if you are a power generating assessee, power generation or distribution. So if you are engaged in generation of power or distribution of power, then the government is giving you two options. Okay. Which two option? Option 1, follow WDV as per block. Correct. And the option 2 is follow SLM. Now this depreciation is given under section 32 subsection 1 clause 2. Correct. And this is given under section 32 subsection 1 clause 1. Okay. This we have already done. This we are going to start now. But one thing I would like to say right now, which I have told you earlier also, that if you follow this, okay, then you are also eligible for what? Additional depreciation. Okay. But if you follow SLM, additional depreciation is not allowed. Is it clear, all of you? Please tell me. Now, I am not interested in WDV as per block. I am interested in SLM for power generating assessees. So how their depreciation will be computed, sir? Listen carefully. Please listen carefully. Yeah? It's very good. It's a good provision. So pay absolute attention, all of you. Suppose I purchase an asset with an original cost of 100 rupees. Okay. The rate of depreciation is say 10%. Okay. And 3 years have gone. So depreciation for 3 years will be how much? As per SLM? Depreciation for 3 years will be how much as per SLM? It will be 30 rupees. Correct. Every year it will be same only. Yes. So 70 rupees is my WDV after 3 years. Okay. And what is the depreciation amount that I am going to get every year? It is 10 rupees per annum. Correct? Yes. Under section 32 subsection 1 clause 1. So this is the amount of depreciation that I'm going to get every year under section 32 subsection 1 clause 1. Okay. Every year consistent amount, and after 10 years the asset will be closed. Okay. Yes or no? Now there is no fun in this. This is hopeless depreciation. There's nothing to teach in this. Okay. There is no fun. No joy in this. The joy comes when I sell this asset. Okay. Suppose if I sell this asset after 3 years, what is the WDV? 70 rupees. How much is the tax benefit I have taken already? 30 rupees. Okay. Right or not? On an 100 rupees asset, I have taken a tax benefit of 30 rupees so far. Are you clear? Please tell me. Now the question is, what if I sell this asset later on? Okay. Suppose case 1. I sell this asset, say at lower than WDV, say at 50 rupees. Okay. I sell this for lower than WDV. Or case 2. Suppose I sell this asset for higher than WDV, but lower than cost. Are you able to understand my point? I am selling at higher than WDV, but lower than the cost, not more than the cost. And the third and the last possibility will be, I am selling this asset at higher than WDV and higher than cost also. Are you clear? So in first case, I am selling for lower than WDV. In second case, I am selling for higher than WDV but lower than cost. In third case, I am selling for higher than both. Correct? Then what is the tax treatment? See, in first case, what the government says? The government says that you are a power generating assessee, you are very important sector for us. That is the reason only for you, we are giving you 2 options. This option is not given to anybody in this country except power generating and power distribution assessees. Not for other sectors. This itself says that we are trying to give you benefits. Okay. So we will continue to give you benefits. Benefit number 1 in case 1. Because you are selling for lower than WDV, there is a loss of 20 rupees. Agreed or not? 70 is the WDV, you are selling for 50. Yes or no? You are incurring a loss now of 20 rupees. Yes? So that 20 rupees will be allowed to you as a deduction by the name called as terminal depreciation under section 32 subsection 1 clause 3. This was our last depreciation, if you remember. Terminal depreciation in the list of 4 depreciations. Remember or not? Please tell me. So this is allowed as a deduction to you. Sir, why it is named as terminal depreciation? Terminal means what? Terminal means something which ends. So because the life of the asset ends here. Yes? Does it end or not? The life of the asset ends na here. So this is the depreciation given to you on end of the asset. Okay. So if you sell for lower than WDV, whatever loss you are incurring, that will be allowed as a PGBP deduction to you, terminal depreciation. Don't worry about it. Okay. Are you clear? Second, there is a principle of equality in this world. If there is a loss, we are giving you deduction. Okay. So if you are selling for more than WDV, you should also pay tax, yes or no? So if you are selling for more than WDV, then the 10 rupees profit which you are making, yes or no, 10 rupees profit is made now by the assessee. That will also be deemed income. That will be your income under PGBP under section 41(1). Sorry, not 41(1), 41(2). So that will be your income under section 41(2). Principle of equality. If there is a loss, we are giving you deduction. If there is a profit, you should also pay tax. And this deemed income is, in the technical words, it is called as balancing charge. What it is called as? Balancing charge by the government. Okay. Third. Sir, what is balancing charge? Balancing charge means whatever benefit you have taken earlier, listen carefully, whatever benefit you have taken earlier in the form of depreciation deduction, okay, if you recover something out of that, then you have to pay tax on that. For example, in this case, 100 rupees was the cost of the asset. 30 rupees you have claimed as depreciation, right? Now you are recovering 80, right? So can I say you are recovering 10 rupees depreciation also, which you have claimed earlier? Yes or no? So you have to balance that in the form of income. Okay. So you have claimed 30 rupees. Out of that, you are claiming over and above 70 rupees, right? You are receiving over and above 70, 10 rupees extra. That extra is balancing charge. Okay. So balancing charge is recovery of your depreciation. Whatever depreciation you are recovering back on sale, that you have to balance it. So with that logic, can you please tell me what will be the balancing charge in third case? How much you are recovering in the form of depreciation? You are recovering only 30 rupees in the form of depreciation. Okay. Yes or no? So rupees 30 will be balancing charge under section 41 subsection 2. Is it clear to all of you? Please tell me. So this is how it will run. The joy is on the date of sale, not on the date of claiming depreciation. On date, SLM depreciations are the most easiest one in this world to compute. Yes, there's nothing. It will remain same only every year. There's nothing to think on that. Now listen carefully, please. Very important. So if you sell for less than WDV, then terminal depreciation, more than WDV, then balancing charge. One more thing we need to understand, the capital gain implication. Because you are selling an asset, you need to compute capital gains also. Yes? Yes or no? So, for capital gains, the government has given altogether a different mechanism. What is capital gains? The government has given separate section for computation of capital gains under section 50A. Listen carefully. Listen carefully. What is capital gains? It is nothing but your sale minus your cost of acquisition. This is your capital gains. Okay. Now, if I go by this logic, okay, sale minus cost is capital gains. Okay. So, please tell me what is my sale in first case? Selling price, this 50 rupees. Correct. And what is my cost of acquisition of the asset? It is 100 rupees. Yes or no? Cost, not WDV. The cost is 100 rupees. Correct or not? With that logic, I will come up with a loss of 50 rupees over here. Right? Capital loss. Right? Listen carefully, please. There is a very dangerous game played by the government over here. 50 rupees is my selling price. 100 is my cost. You can see over here, the cost of the asset is 100 rupees. Okay. 50 rupees is my loss. Now, if the government start to do computation of capital gains in this manner, there will be dual benefit given to the assessee. Let me tell you how. Dual benefit. Can I say 50 minus 70, you are already claiming under PGBP? 50 minus 70, you are selling asset once or twice? Only once, na? Once you are selling and you are claiming loss under two heads. Once you are claiming 50 minus 70 as terminal depreciation, and then you are claiming 50 minus 100 as what? Capital loss. So the government said that you cannot compute capital gains like that. We will redefine the cost. We will not allow you to reduce 100 rupees from here. Okay. Are you able to understand? We will redefine cost. So they redefined the cost. How, sir? They redefined the cost. They said that don't take this as cost. Redefine the cost. I said then what should I take the cost as? They said that we will give you a redefined cost mechanism. Listen carefully. And they said that the redefined cost will be called as adjusted WDV. What it will be called as? Adjusted WDV it will be called as. Okay. And they said that the formula of this redefined cost is, listen carefully. The formula of this redefined cost will be WDV. Will be WDV add balancing charge. Add less terminal depreciation. In one case, there will be either this or this. Both of them cannot be there in one case. Yes or no? You cannot have a terminal depreciation and balancing charge both in one case. Yes. Whatever amount will come, that will become your adjusted WDV, and that you can take as a cost. Okay. Now, they have given such a formula. It is such a beautiful formula that wherever there is a capital loss coming now, there the capital gain will become zero. You can check. I will just show you now. And wherever there is a gain coming, gain will remain gain. Wherever there is a loss, it will become what? It will become what? 0. And wherever there is a capital gain, it will remain gain. Let me show you. Just remember this formula. Okay. Now please tell me. Accordingly, in first case, my selling price is 50 rupees. Correct? My cost of acquisition. Can I write 100 over here? No, I have to write adjusted WDV, right? So let's find out the adjusted WDV in case 1. Okay. What is WDV? 70. Is there any balancing charge in case 1? No. Is there any terminal depreciation in case 1? 20 rupees. Therefore, adjusted WDV came to 50, cost of acquisition 50, capital gain 0. Can you see this? Can you see this? Similarly, in second case, what is your selling price in second case? 80 rupees. Correct? What is your cost? Can I take 100? No. I have to take readjusted cost. What shall I write over here? Please see here, Niveda. 70 is my this same example is there in your book. Don't worry. Okay. Balancing charge is 10 rupees in second case. Correct? And then tell me what? 0 rupees to 80 rupees. 80 minus 80 again 0. Okay. Now in third case, what is my selling price? 120. What is my WDV in third case? WDV is same for all the cases. Balancing charge is 30. Okay. Terminal depreciation is 0. Therefore, this will become 100. See, in third case, where there is a gain, it will come to gain of 20 rupees. So, wherever there is a loss, loss is converted to 0 rupees. And if there is a gain, gain is remaining gain. Are you able to understand this mechanism by the government? See what they have done. They have not done anything great. They have done a simple mechanism. Basic mathematics. See here. See what they have done. I'll tell you. Basic mathematics I'll explain. Please tell me. Terminal depreciation as an assessee for you, it is a benefit or disadvantage? For assessee. Benefit. Right? So you are getting benefit in PGBP? You are getting it now? So while computing the cost of capital gains, we will reduce the cost so that the gain should increase. Are you able to understand? So we are giving you benefit in PGBP. So we will not give you that benefit again in capital gains. Are you clear? Now, balancing charge is benefit or disadvantage for the assessee? It's a disadvantage. It's an income, right? So balancing charge is added back so that your cost is increased, so that you should not get disadvantage under capital gains. Are you clear? Is it clear? So this is how the government has made this particular section. Now, if you want, you can go through this from your book. I have written everything over here. The numbers might be different. Okay, instead of 100, it is 1 lakh. Okay, but that should not matter to you, right? This entire thing is there till here. Now, one last thing is there in this particular discussion of depreciation. After that, the next thing will start, that is other deductions of PGBP. Here, after this discussion, the discussion of depreciation will complete. Okay. So, and this next one is extremely important from exam. SLM depreciation was not very important for exam. Let me tell you. Okay. SLM depreciation once in a while they could ask, but otherwise they will not ask. Okay. But the next one is extremely important for the examination. Okay. That is section 43A. Very, very, very important section. Very important. Very, very lot of time they have asked a question on this. What is section 43A, sir? This section says that if you fulfill 2 conditions, how many? 2 conditions. Then you will fall under this section. Okay. Condition number 1. If you have imported an asset, if you what? Imported an asset. Okay. Clear? And secondly, there is a foreign currency loan on it. Foreign currency loan. You have taken loan in dollars, pounds, not in rupees. Okay. Or there is a foreign credit. Foreign creditor. Okay. Where you are going to pay to the creditor in installments in foreign currency. Then this section is applicable. Okay. Are you clear? So suppose if I import an asset from say Japan and I take a loan from a bank, foreign bank in foreign currency, then this section is applicable. If I import a asset from Japan but I take loan from SBI, then this section is not applicable. Okay. Both the conditions have to fulfill. The asset should also be imported and the loan should also be in foreign currency. Then the law says that whatever forex gain or loss which comes on payment, which comes on what? Payment, not on balance sheet date, not on 31st March. Okay. Whatever gain or loss which comes on payment, that is whenever you will pay, at that time if there is a loss or if there is a gain, that should be adjusted. That should be adjusted to the what? WDV of the asset. Okay. For example, I bought a machinery of $1 lakh. Okay. Today the rate is 60 rupees. Okay. $1 is 60 for example. Now on the date of payment, suppose the dollar becomes how much? 80 rupees. So there is a loss of 20 rupees, right? So whatever loss is there, I have to adjust in the WDV. Adjust in the WDV means if there is a loss, you will increase the WDV because that is your extra cost. Yes or no to buy that asset. And if there is a gain, on payment, then you will reduce from the WDV. Is everyone clear? Please tell me. So if there is a loss, you will add to the WDV. If there is a gain, you will reduce from the WDV. I hope it is clear to all of you. Okay. Now let me put one example for you all to further explain this in a better manner. Okay. Shall I? Suppose in previous year 2021, I imported an asset. Say 10% is the rate of depreciation. Okay. And the actual cost of the asset is $1 lakh. Okay. And I imported this on 15th of June 2020. Okay. And there is a foreign currency loan. Okay. Now, shall I say what is the cost of my asset? $1 lakh. And on 1st of June, the rate of dollar is 60 rupees. Okay. So I will convert that and my conversion rate will come to 60 lakh rupees. The cost of the asset in INR is 60 lakh rupees. Okay. Now in the first year, there is no payment. There is no payment. I did not make any payment out of $1 lakh. It is fully outstanding. So no adjustment. Nothing should be done. You directly reduce depreciation at the rate of 10% at the end of the year, which will come to 6 lakh rupees. Correct? And this will be your WDV on 31st March 2021. Is it clear? This will come to 54 lakhs. Is it clear, all of you? Now, in the next year, previous year 21-22, my opening WDV is how much? 54 lakhs. Correct? Now suppose on 15th of June 2021, suppose I paid $20,000 and when I paid $1 was 70 rupees. Okay. So now I paid. So because I paid, section 43A will attract. Okay. Now is there a loss for me on payment? How much loss? 10 rupees loss per dollar. So this loss will be added back to what? the asset. Is everyone clear with this? It should be adjusted in the asset. How much is the loss? 10 rupees for $20,000, correct? So 2 lakh rupees is my loss. Is it clear? So now my WDV after this loss comes to how much? 56 lakhs. Is it clear? Please tell me. And now I will reduce the depreciation at the rate of how much? At the rate of 10%. How much it comes to? 5,60,000. Okay. So now my WDV on what? 31st March 2022 will come to how much? It will come to 50,40,000 rupees. Okay. Now I am going in the third year. Previous year 22-23. Okay. My opening WDV will be how much? 50,40,000. Okay. Then again on 15th of June 2022, I paid say $20,000. At that time, $1 was 50 rupees. So what is happening now? I am incurring gain. Yes. So gain will be reduced from the cost. Gain on payment. Yes. So this again 10 into 20,000 will come to 2 lakh rupees gain. This will be reduced from the cost. Okay. And now my cost will be 48,40,000 rupees. Is it clear, all of you? Please tell me. And then I will compute my depreciation at the rate of 10%. How much? 48, 4 lakh, 84,000. Is it clear? And this will be my WDV on what? 31st March 2023. Is it clear, all of you? Please tell me. So this is how it will go on till the time my loan is what? Not repaid. Are you clear? Please tell me, all of you. So when this section is applicable? Tell me.
Imported asset and there's a foreign currency loan.
Yes, imported asset and there has to be a foreign currency loan or foreign currency credit. Then it is applicable. Okay. And it is a very important example. So I want you all to write down this in your book. Okay. Write down in this notebook. Done, na? Now after section 43A, let me tell you one last thing in the discussion of depreciation, and that is, can foreign currency loss, foreign currency gain only come in case of imported asset and in case of foreign currency loan? It can't come in other cases. For example, what if I buy an asset from India? I buy an asset from India. I am not importing asset. I am buying asset from India, but the loan is foreign. Is it possible? Then also foreign currency gain or loss can come. Yes or no? Foreign currency gain or loss can also come on debtors. It can also come on creditors. Yes or no? It can also come on outstanding expenses. Yes? So foreign currency losses can come on many other things. Foreign currency loss can also come on when you merge your foreign branch into Indian balance sheet. Yes or no? Branch operations. Please tell me. So what will be the treatment of those losses and those income? What has to be done in that case? So any other forex loss other than 43A, other than which one? 43A will be treated like income and will be treated like deduction. If it is an income, credit to P&L. If it is a deduction, debit to P&L and claim that deduction. And if it is a 43A loss, then you have to adjust in the WDV of the asset. Did you understand what I said? Please tell me. So any other gain or loss should be treated like you treat in accounts. Today I am doing the transaction, so record as per today's date. Then on 31st March, you have to reinstate the value. You remember, in accounts, you reinstate the value on 31st March, determine the notional gain or loss. So accordingly, you have to determine the notional gain or loss. And later on, what you will do? Later on, you will, on the date of settlement, you will actually settle the loss. Okay. So listen carefully. So you have to divide all the losses in your mind into two parts. If it is a 43A loss or 43A gain, then adjust in the WDV. Okay. But if there is any other forex gain or loss, okay, then you have to, if it is a gain, it is an income. If it is a loss, it will be a deduction. Okay. Secondly, if there is any other gain or loss, you have to treat like you treat in accounts. I am doing a transaction. I am selling goods today of $10,000. Okay. So I will pass an entry, debtor account debit to sell $10,000. So I will recognize today as per today's rate. Yes. Then on balance sheet, I will revalue the way I do in accounts. Okay. And then actually when the customer will give me the money, I will actually find out the final gain or loss. Okay. Exactly like you do in accounts. Okay. The only thing which you have to keep it in mind is if there is any gain or loss X other than 43A, then you should do the treatment as per the ICDS. And there is an ICDS on the same which talks about that which rate to take, with what should be the conversion rate, etc. That is mentioned in the ICDS. Okay. And the ICDS says that you should take the conversion rates of the SBI. You should take SBI conversion rate and not any other conversion rate. Okay. So this is the difference between section 43A and 43AA. 43A is applicable for fixed asset which is purchased from outside India. Okay. On which there is a foreign currency loan, foreign supplier. Any gain or loss, WDV should be adjusted on the date of payment. Okay. No adjustment on 31st March in 43A. Are you clear? But 43AA, any gain or loss other than 43A, other than, that can be any gain. We have put some examples over here. That can be monetary gain, non-monetary items gain, translation of financial statement, forward contract loss, foreign currency translation. There can be, these are just some illustrations. Any gain or loss other than 43A, will be classified under what? 43AA. And under 43AA, you have to go to P&L account. It shall be treated as income. If it is a gain, it is an income. If it is a loss, then loss, you can claim it as per ICDS 6. Is it clear? And as per accounts, on 31st March, you have to reinstate as per the rate mentioned on the 31st March. So everything you have to do as per what? As per the accounts only, if it is a 43AA. Is it clear to all of you? Please tell me. Okay. So this is what this section is all about. 43A is very important. 43AA they have not asked so far in the examination. 43A they have asked a lot of time in the form of an adjustment. Okay. Last, there is one ICDS. I am not doing that ICDS today. I'll be doing it tomorrow. Anyways, it is similar to accounts only. Okay. So I'll be taking up this particular thing in the next lecture. For today, I am stopping the lecture here. Okay.